Welcome back to The Explainer. Today, we're doing something a little different. We're going to roll up our sleeves and use a real-world case study to figure out how financial products are actually sold. By the time we're done, you'll have a much better sense of how to look at financial advice and, honestly, how to protect your own wallet.
So our whole investigation kicks off with this quote. The core idea is pretty clear, right? Investing is good for your future. But the way it's phrased, well, it's a little unusual. And that's actually our first big clue. It's a fantastic reminder that behind every product, behind every policy, there's a real person. And if we want to understand the product, we've got to start by understanding the advisor.
So here's our game plan. First, we'll meet the advisor at the center of our case study. Then we'll check out all the different services he offers. After that, we'll really dig into a specific insurance plan, get into that all-important fine print, and then pull it all together at the end to see what it means for you. All right, let's jump right in. Part 1, Meeting the Modern Advisor. And the question we really need to ask ourselves is, who is the person giving you the advice? Okay, so on the surface, this all looks pretty standard, doesn't it? We've got a name, Gaurav Deep Gotham. He's got an official agency code with LIC, which is India's big life insurance corporation. And he's got this title, Government Authorized Advisor. So, it feels legitimate, but that's really just where the story begins. And this is where it starts to get really interesting. Just look at this mix of credentials. He's got a master's degree in math, okay, but then another MA in political science, international relations, and marketing. Plus, he calls himself a researcher and an organization leader. This is not your typical insurance agent's profile. It paints a picture of someone whose business is probably way bigger than just selling one type of product. So, with a background that diverse, what kind of services does he actually sell? Well, as you might guess, it's a whole lot more than just insurance. And here we go. Right alongside investment advice, you see he's offering services in marketing and, get this, market research. And look closer at that market research. It's offered in Sanskrit and Hindi. That points to a very, very specific business niche. And those starting prices? They're so specific, they just add to the unique picture we're building. Now, this right here is pulled straight from his marketing materials. The Hindi text is basically just a textbook definition of marketing. Distribution, sales, advertising, that kind of thing. But what I really want you to see is the attribution at the end. By management. It's a small typo for sure, but it's another one of those little clues. When you're trusting someone with your money, every single detail counts. Okay, so we've got a handle on the advisor and his pretty wide range of services. So now let's narrow our focus and break down a specific product that someone like him might recommend. This is the LIC New Jeevan Amar plan. First things first, what in the world is this? It's a pure risk premium plan, and those words are absolutely crucial. This is not an investment. You are paying for one thing, and one thing only, life coverage. The best analogy is that you are renting financial protection. If you pass away while you're renting it, your family gets the payout. Simple as that. And this is the single most important thing to get about a term plan. There is no maturity benefit. Let me say that again. If you outlive the policy, say it's for 30 years, and you're still here on day 1 of year 31, the policy is over. And you get nothing back. The money you paid was for the protection during those 30 years. That's the deal. And we're not talking about small amounts of money here. The minimum payout, the sum assured, is 25 lakh rupees. That's about 30,000 US dollars. For a lot of families, that is a life-altering sum of money, which just goes to show how critical it is to get all these details right. So right off the bat, you've got a big choice to make. Do you want a level sum assured, where that payout number stays the same from day 1 to the end? Or do you want an increasing sum assured, where the payout actually grows a little bit each year? Now, that second option is going to cost you more in premiums, but it's designed to help the final payout keep up with inflation down the road. The plan also has some other key features that give you a bit of flexibility. Non-linked, for example, just means its value isn't tied to the ups and downs of the stock market. You can also add extra coverage, like for accidents, and you can even choose to have the payout given to your family in installments instead of one lump sum. There are a lot of moving parts.
Okay, so we've seen the shiny features on the brochure. Now it's time for the part that everybody wants to skip, but is without a doubt the most important part of any financial decision, reading that fine print.
The basic rules of the game are pretty straightforward. You can get this policy as early as age 18 or as late as 65. You can pick a term anywhere from 10 to 40 years. The only hard rule is that the policy has to end by the time you turn 80. So this timeline gives us a really clear picture of who this product is actually built for.
And now for something that's really important to know. This is a tough topic, but nearly all life insurance policies have a suicide clause, and this one is no different. What it means is that if the policyholder dies by suicide within that first year, the family does not get the full death benefit. They usually just get a portion of the premiums back. It's a standard clause, but you absolutely have to be aware of it.
All right, so we've learned a ton about this plan, its features, its rules, what it's for. It seems like a pretty standard, solid insurance product. So the obvious question becomes, can you actually go out and get one today? And here it is. This slide is probably the most important lesson of this entire explainer. If you go to the official LIC India website, it says this plan is active and available for sale. But if you go to a huge online marketplace like Policy Bazaar, it says the plan has been withdrawn. So who's right? This is it. This is the reason you can never just trust one source of information. You have to verify everything yourself, preferably from the official source, before you make a move. And that brings us to the home stretch. We've pulled this case study apart piece by piece. So what's the big takeaway? What's the action plan that you can actually use?
It really comes down to a pretty simple three-step process. Step 1, vet. You have to vet the advisor. Look past the job title. What are their credentials? What services do they offer? How do they present themselves? Step 2, understand. You need to understand the product inside and out. Is it protection or is it an investment? What are you really paying for? And step 3, verify. As we just saw, information can be contradictory. Always confirm the big details yourself.
So we'll leave you with this last question to think about. When you go out looking for financial advice, remember, you're not just grabbing a product off a shelf. You are buying the person's expertise. You're buying their diligence, their attention to detail, and yeah, you're even buying their spelling. So choose wisely.